Good morning. I'm Eddie Sunderji, and welcome to OETV's Crypto Dome. We are here with Adam Blumberg, co-founder at Interaxis. Adam, what's up, bud?
What is up, Mehdi? I mean, we always say, man, it's good to see you. We always say there's always something to talk about in crypto, never a dull day. Man, yesterday was incredibly fascinating, I guess. Not necessarily all for good reasons, but fascinating stuff to talk about today.
I think at this point, there's no one not talking about crypto, knowing these acronyms of FTX, SBF, and obviously DOJ. They're all in the mix. It's, we being Crypto Dome, it feels like, two men enter, SBF and DOJ, and one man leaves. And my money's on the DOJ.
Right now, it's got to be. The interesting thing is the hearings were going on live yesterday at the same time as the World Cup semifinal. And yes. I'm not sure, people I'm sure had the little picture-in-picture going all day watching both of them because they were both kind of fascinating. I think the hearings were a little bit more fascinating, to be honest.
I don't know. There's some pretty good goals by Argentina, so I'm not gonna downplay that side as well. But yeah, obviously, as everyone's aware, there's hearings going on. SBF has been arrested. The Department of Justice has filed 8 charges. This could bring, I believe, up to 115 years in prison for Sam Bankman-Fried. Just listening to John Ray, the current CEO of FTX, during these hearings, was actually one. I thought he conducted himself amazingly. And he did a really good job in breaking things down. His presentation on different aspects of the business, the lack of documentation, the lack of governance, the lack of any fiduciary responsibility on the part of SBF. I thought he did a fantastic job in addressing all questions around this. And it just comes down to one simple thing, right? Sam Bankman-Fried it's simple fraud, and there's no way around it. There's none of this, oops, I didn't know. Like, this is beyond fraudulent. What was your biggest take from the hearings yesterday?
There were a few big takes and a few things I wanted to hear, and I actually honestly started in the morning thinking, there's no way I'm going to watch this. Like, he's not even going to be there. I'd probably watch it if he were there. But I'm not going to watch this other guy who just walked in the door a few weeks ago. But here were some of my takeaways that was a little bit fascinating. One, you're right. John Ray is fantastic. The fact that he's wrapped his arms around so much of this in such a short amount of time. And, famously, he was the guy that came to my hometown of Houston and did, something similar with Enron. And honestly, it's similar in that a lot of what he's having to do is unwind and help Congress understand where was the fraud, and most importantly, who knew about it, at what point did they know about it, who should have known about it, right? I think that's going to be a big part to pull out. One of the congressmen, and I don't know their names, I don't know most of their names, but one of them, straight up said, look, there were a lot of, powerful venture capitalists investing in FTX. Why did they not? Where was the due diligence there? Why did they not find anything? And John Ray said, I don't know. That's kind of up to them. I'm not privy to the due diligence that they did. That's their job. And I think Congress or someone is going to have to go to some of those venture capitalists at some point and go, look, this dude found out in 2 weeks and he knows virtually nothing about crypto. You guys are the venture capitalists. This is your job. How did you not figure this out? And that's where I think we're going to have to find out, was it so well hidden and obscured by some sort of backdoor code that they couldn't figure it out? Or was it just so much FOMO that everyone just had to put their money into FTX because the other guy did it, that they didn't really care to do the due diligence? And if it's full on, the code was so good that it was fraudulent and they were stealing money in a way that you couldn't understand or most people couldn't see, then we go back to SBF and Caroline and that whole team and figure that out. Or we go, all right, from now on, when VCs are doing some sort of due diligence, they better bring in some coders, they better bring in some devs to read the code. Or was it just these VCs just didn't do their homework, right, on billion-dollar investments?
I think it's much more of the latter. It's a matter of FOMO. lack of due diligence, just based on, even some looking at some of the questions based around the VC investments, there were no financials for the most part. Financials that were alleged were brought in, were thrown in on Slack channels, or self-deleting messenger apps like Telegram or Slack or WhatsApp or whatever. So there was no formal documentation around half the things, and people were still willing to put in, as you say, hundreds of millions or billions of dollars in investing in this, purely because the next guy was doing it. And he did a great job of playing this shell game where, Adam's in, hey, Stu, you want to get involved? Well, these are the terms, take it or leave it. But
look, he's an engaging person, Mehdi. You and I have talked about Sam Bankman-Fried many times on this show, and talked about him as one of the good guys in crypto, right? He was the savior of BlockFi and Voyager and Celsius. Like, he rode in like the White Knight, and we thought he had all this money. And the problem is a huge part of that is you and I kind of outsource some of that trust and due diligence to those venture capitalists putting in billions of dollars. And we said, well, if they're willing to do it, their entire job is not necessarily to find the investments. They get hundreds of pitches every day. It's to weed through them and figure out which ones are going to be the better plays, the safe plays, all of that. And that's their job. And the thinking is, if they're not going to get defrauded, right? They're not going to get hoodwinked by that guy. Certainly not by that guy or that team. And now we look at it and everyone goes, oh, well, of course. I mean, look at, he's such a horrible fraudster, but most people didn't see that. I'll tell you what, I was going back and reading, who the VCs were. And I read an article that said A16Z, Andreessen Horowitz, was approached several times by FTX and never invested because they said, we don't like the fact that they don't have a board. We're not going to invest in that. We don't like the fact that they don't have regulatory controls. They do their books on QuickBooks. We're not going to invest in all that. And one thing that John Ray said, it's really important to point out, FTX didn't have a bank account. So anyone sending money had to send it to Alameda because Alameda had a bank account. How was that not a monster red flag? Of you're sending it to a different company, and yet you feel confident that these two companies are not completely intertwined? That's a pretty monster red flag for anyone who's on that, VC private equity investment in that world. That should be a pretty big red flag there of, hey, you told us these two companies were separate, and now you're saying to send money to one to invest in another. That doesn't quite make sense. That doesn't feel good, but the other guy did it. So I guess I'll go ahead and do it too.
So maybe your FOMO came and belief in SBF came more from the VC guys. Mine personally came from Tom Brady, because I think he's wonderful, and obviously if he endorses SBF and FTX, then it's obviously legit.
Well, yeah, I mean, if the GOAT's going to do it, then I have to go with it, right? That's how endorsements work.
But all joking aside, right? So we got big stars like Brady, Matt Damon, and then you've got Kevin O'Leary, Mr. Wonderful himself. He was a skeptic of crypto for many years, right? And suddenly he gets a check from SBF and off he goes to the races. Oh, this is the best thing since sliced bread. So surely there's got to be some culpability on these guys, who are public speaking figures, these endorsements that come out to Joe Blogs Retail, right? And, I'm sitting there, I've got $100 in my bank account. I'm like, hey, you know what? Mr. Wonderful is endorsing this. Surely this makes sense for me to utilize this platform to go and invest in crypto. They're behind it. This has got to be legit. What happens to these guys?
I don't know if I don't think anything can really happen to them financially. Now, I'm not privy to what Kevin O'Leary said on stage, if he told people to invest. I don't know if what he did is that much different from Michael Saylor going on YouTube and telling people to mortgage their homes and buy Bitcoin. You should kind of know who to listen to. It's kind of akin to if I, buy a car because one of those guys endorses it and I get in a car accident because something's wrong with the car. Do I go after Matt Damon or Tom Brady because of that? Like that, you have to draw the line somewhere at celebrity endorsements. Kevin O'Leary, maybe a little bit different in that his career now is as an investor. But if anyone's seen Kevin O'Leary, he's a salesman. Like he's gonna go wherever people pay him. He's not necessarily doing any due diligence at all. As a matter of fact, famously, after all this played out, he said, "I'd invest in him again. I think he's telling the truth." And turns out he absolutely wasn't. You know, like not only are you horrible at due diligence, but you're a horrible judge of character, right? Like you're probably the worst poker player of all time.
So, all right. So now, moving on from this.
Well, one quick thing, Mehdi, like I want to talk about real quickly in terms of kind of my fascination with the hearing yesterday is hearing the members of Congress and the questions that they asked and the directions that they went, because it's very clear that many members of Congress have no idea what they're talking about when it comes to crypto. And that's not a horrible thing. Like they do have a lot of things on their plate, and crypto is probably way up until a few weeks ago was way down the totem pole on things they had to discuss. We have bigger problems in the country than crypto, quite honestly. So I don't have a problem with them not completely knowing. Several of them took this opportunity to completely bash it, right? There was the one senator who said we should call it creepy dough, which I don't know how long he's had that line in his back pocket waiting to go, and used his 5 minutes for that, which seems a little ridiculous. But there are some members of Congress that clearly are supportive of the innovation, have thought about this. And even if they don't fully understand crypto, they got the fact that this is just plain old fraud. And they asked John Ray questions about bankruptcy and about what he's learned and about who knew what and what he's learned going through the books. And I thought that part was kind of fascinating. They're actually trying to get something out of this. From a positive standpoint, even not knowing that much about crypto, just like back in the Enron days, they probably didn't know that much about gas trading, but they're still able to answer questions about a bankruptcy. That shows you that this is less about crypto and more about a fraudulent players. And then again, some of them asking questions about who knew what and when should they have known, what other players getting into the market should have known something, what other investors should have known. Talking about all the different bank accounts and such, holding John Ray accountable and saying, look, when you learn this, will you share it with this committee? When you learn this information, will you share it with the committee? And of course, the congressman's savior in all this now is Tom Emmer from, I believe, Minnesota, who has basically come out and said, look, this is why we need crypto. Everything here was centralized. Everything here was behind curtains. We couldn't see what was happening. And the whole point of decentralization and transparency is to get that out in the open. If this were all done out in the open, we would have seen it. And by the way, which Tom Emmer said, it was the crypto people that figured this out, that figured out that this was a fraud. It was not Congress. It was not the SEC. It was no one with judiciary, nothing like that. It was crypto people that started looking behind the scenes of different wallets and movements of money and figured out what was happening. And that is where this idea of decentralization, decentralized ledgers, transparency should be taking us. And we should foster that innovation, not use this opportunity to squash it because we're upset that this guy and this team committed fraud. And I thought that was really important, that he called out Congress to go learn more about it.
And I think that's a very valid point. And I think just on the back of that, we saw when November, whatever, 7th or 10th or whatever it was, that we saw the Chapter 11 filing come in for FTX. We saw Bitcoin and other crypto assets sell off quite aggressively around that period. But we did see a little bump yesterday, specifically in Bitcoin, which obviously is a barometer for a lot of the crypto assets. We did see a bump up, not aggressive, but it got a lift after Sam was arrested and during the House hearings, right? So I guess what you're saying, and it fits in with the narrative, is that there's an element of comfort coming back in the way that this is being addressed, right? This is a fraudulent situation. This is a Chapter 11 bankruptcy filing. That's what we're going through. It's nothing to do with the underlying asset class that we're discussing.
Right. I don't want to say it's nothing to do. It's very little to do with the underlying asset class. And they're saying there is a need for regulation of centralized entities, which you've said. And what Tom Emmer was saying was, we don't have the need to regulate all of decentralized finance. It's not our place to do that. It's really important. And keep in mind, Mehdi, that bump up was also at the same time that inflation came out lower than expected. So it wasn't entirely the arrest and everyone watching this beautiful pink Bahamian court yesterday as well. It was also the fact that inflation came out lower than expected and all the markets got a bump.
I'll take that as well. I was giving a bit more credit to the.
I'm not. Yeah, I mean, look, maybe what you're saying is we're a little bit back to some semblance of normalcy because we feel like, all right, no more shoes are going to drop. We thought that before. Like we keep thinking that, and there keeps being something else and something else and something else. So I'm not ready to say there isn't some major event, but some of those major events are not necessarily inherent to the investment thesis of crypto. That all being said, I've told you before, I don't much care what the price is. The price doesn't matter all that much because we don't know how to value it right now anyway.
So what's next? Where do we go from here, right? Obviously, everyone agrees we need some more regulation, right? There was a note out yesterday, or the Canadian regulators are banning leverage, and they have to segregate user funds. That's huge. That's a fantastic first step, right?
And they did that really quickly, right? Yeah. That seems very easy. It's a very simple thing. Segregate user funds, which FTX should have been doing. Don't allow leverage, right? People get in trouble. Individuals, institutions, whomever, get in trouble when you allow leverage. That's really easy for centralized entities.
So surely, and I know there's been an examination of Binance, Crypto.com, all the other exchanges in regards to where they sit on segregated user funds, and if there's any commingling of assets, which is obviously segregated user funds, but whether they've got a 1-to-1 ratio in regards to their custody assets.
Right.
No leverage.
Right. And so, all the major exchanges are kind of coming out and proving, saying, here's our reserves. They match user deposits. So we have enough in there. Interestingly enough, you just mentioned crypto.com. They came out and said, look, we have enough value of assets for user deposits. The problem is some of those assets are in very, very, very speculative tokens, right? So you wonder what happens if the value of those speculative tokens goes down. So, there's a little bit of question there. And I think a lot of people are looking, they're trying to be now that reporter that finds it all, or they're trying to be that investigator that finds a problem and brings it up and gets to be the hero that brought down this exchange or something. And some of them, I think there's likely very little there in terms of these exchanges at this point, not having the reserves because they've seen what happens. Like they've seen all this. It's not that much different than your question earlier about Kevin O'Leary and Tom Brady and Matt Damon and all these other folks. Like they're probably the negative on them is who's going to trust them anymore, right? Are you going to trust them anymore? Now, when it comes to Tom Brady and Matt Damon endorsing things, that's different. They do that all the time. I don't buy a watch because Matt Damon wears the watch. I don't really care. But when Kevin O'Leary does, it's a little different. So you go, all right, is Kevin O'Leary going to be able to do that again? It's kind of the same with these exchanges. They have to do this now. They have to prove their reserves. They kind of have to prove their liabilities as well. Everybody's going to be looking. And if they don't do it, everyone's just going to pull their money off.
That's it. And, away from some of the exchange allocation narrative, let's have a look at some of the other this web of deceit that we have out there. There's all, it's pretty far-reaching, right? Because a lot of people have taken money that came up, in the hearings yesterday as well. The fact that a lot of the politicians have been receiving political donations, and does that bring their judgment into question on where they're taking their fund from? Who knows, right? So a lot of them are giving them money to charity and whatever they're doing with it. But look at people like the CEO of the block, right? He just resigned as well. He'd taken a loan.
Oh, he'd taken, yeah, he'd been given, I think it was something in the order of $26 million from FTX. So basically, when he bought the block, so the block was started by several people, and this guy bought out all the shareholders with the idea of it's going to be an employee-owned company. I'm going to give the employees equity in the company, and it turned out the money he got to buy it was from FTX and Sam Bankman-Fried. It was not family money or anything else. And then he continued to get money. He got loaned money to buy a penthouse in the Bahamas, and no one at the block knew about this, which is surprising. But they all thought that he had family money. Right now, this is a problem because we count on these news sources to be independent. And the block, the interesting thing is, since no one else knew about it, the block has been incredibly independent. You can look at all their stories and go, look, they handled SBF and FTX the same way they handled Binance and the same way they handled Gemini and everybody else. And it was it was shocking to them to see this. So now you have, you go, okay, how much of this was fraud? How much can Sam Bankman-Fried play this? Like, oh, shucks, I didn't know what was going on. I made a couple of mistakes. To you were actually paying you paid essentially to buy a publication. That's some sort of intent there. You didn't do that out of the goodness of your heart. You didn't do that so the block would be an employee-owned company. You did that at some point to influence the stories.
We've seen that before as well. So
right. So there's a bit of premeditation there, and you wonder, like, at what point is this just an evil genius? At what point does he stop playing the all shucks? Like, I mean, you've seen the movie Primal Fear, right? At some point, he's going to switch characters and go, "Oh, you were the bad dude the whole time." Sorry for the spoiler alert. Anyone who hasn't seen Primal Fear, you should definitely see the movie. But that's what I feel like here. Like, at some point, he's just going to switch characters and be like, "Oh, you were the really, really bad guy."
I think the oh shucks moment has kind of fallen out the window at this point. That's not flying anywhere.
Yeah, I think his parents are on the all shucks moments, by the way.
Okay. So, all right, let's move away from some of this. There's something I wanted to ask you. Ethereum, right? So obviously there's been, we have all the other universe going on. Let's have a look at some of the nitty gritty and the underlying workings of some of these crypto assets, the crypto universe and blockchain and such. Ethereum, right? The number of smart contracts that they had has dropped quite significantly last month, right? I believe by something like in the order of 58%.
Right.
Gas fees have increased. The average number of transactions has been declining quite steadily over the last 6 months. But the number of blocks per day and block size has remained pretty much unchanged. Are you seeing, and obviously you're talking to a lot of people in the industry, are you seeing any concerns around the adoption and usage around Ethereum?
I'm not seeing any concerns at all. What I'm seeing is actually excitement over what is being built. And I don't say that to be like an apologist or cheering for it or something like that. It's that if we look to what was happening months ago and even a year ago, right, it was everyone pouring money into all these different protocols, trying to do this yield farming, trying to earn 182% yield. All these protocols are coming out, and you had VCs just throwing money at these developers after a week and a half of building something because they thought this is going to be the one. You could launch a token, you could have liquidity immediately. And that's why we were seeing so much activity on the Ethereum blockchain and remember, we had the NFT craze as well, right? So you had people trading NFTs and launching NFTs and so much happening on Ethereum. And so much of that has come down because we don't have the ability to have those speculative assets or those speculative protocols anymore. The value of so much of it has come down. The investment into the ecosystem hasn't been as much because because VCs and investors are being smarter with their investments. They're doing more of that due diligence. They're looking at what the addressable market is. And therefore, we're not seeing people just move money from pool to pool to pool to try to earn 180% in all these different pools because the opportunity isn't there anymore because it never made sense from the beginning, right? That opportunity isn't there. What's being built is actually stuff we really need and really good interesting use cases are being built. Use cases like how do we use NFTs instead of tickets? How do we use NFTs as tickets? So other opportunities, other use cases we're seeing on top of Ethereum are being built, instead of just how can I move my money around and try to earn 182%, because those opportunities just aren't there anymore.
All right, so you just touched on it, and I wanted to wrap with this as well. NFTs, are they the new loyalty card? Like, everyone's got their little keychains or their little app holding 57 different loyalty cards for anywhere and everywhere you go. Are NFTs going to be the next, loyalty card?
Oh, sure. Look, when I started studying and learning about blockchain back in 2017, people were already talking about utilizing blockchain technology for loyalty points and loyalty rewards, right? Because in essence, that's essentially what frequent flyer miles are, right? Aren't they just? Isn't that just an NFT? Isn't that just a token that happens to sit on, the United database, the United blockchain, or the Delta blockchain, or whatever? That's all it is. So we were talking about that in 2017 and 2018. NFTs are likely going to go that direction and going to give more functionality. So Starbucks did it recently, and more of these companies are going to just play around with what they can and can't do. So Starbucks is doing one where you can go through certain challenges, you can earn certain things, and basically it's how do we increase engagement? How do we get you to go back to Starbucks to do something? And how do we experiment with this technology? A company or a protocol that I like, I know the founders of it and such, called Unlock Protocol, created a little advent calendar with NFTs where every day I go connect my wallet and I unlock an NFT, and it goes into my wallet, and that NFT might one day it gave me a free pair of socks that say Unlock on them. They get sent to me. One day it gave me a video about how to use Unlock. One day it gave me something else. But if you'll remember, Betty, I think you will. I remember the old McDonald's Monopoly game, right? Where you go to McDonald's and you get a little peel off from your fries and your Coke and all that. Like, why shouldn't this be the new way we play the Monopoly game? Right? That's exactly. It should be NFTs. And once I've connected and collected enough of them, I get something from McDonald's or from Starbucks or from whoever. So of course they are. They're easier to track. They're cheaper than putting a little piece of paper on every single carton of fries. Right. So of course they're going to go this way.
There's definitely a few firms out there that are working on doing that type of protocol for even some of the larger financial institutions, right? Where if you have enough points or have coins, right, you start getting some discounts on your custody accounts or execution accounts, all these types of things. So there's so many applications to this, and all of it can be maintained utilizing this technology. It's fantastic.
Right. Exactly. And then those companies don't have to maintain their own databases. The database is the Ethereum blockchain or whatever chain they're using. And I just have to have a wallet. It's going to get more people to figure out how to use wallets. We all figured out how to use a little wallet in our iPhone, right? That keeps track of your Starbucks card and your United card and all that. This is just going to be another wallet like that. And it's going to have all your loyalty points. And you're not going to care that they're NFTs anymore. You're not even going to know, but it's going to be better and give more functionality to the companies that are offering.
Adam, we're at time, and this has been a deep dive conversation as always. And I'm sure there's going to be more fallout from FTX and SBF and the DOJ and anyone else that wants to throw in an acronym. But we'll be back next week to cover all things crypto. Thank you, Adam.
Looking forward to it, Mehdi. Thanks so much.
Thank you for watching, and good luck investing.